Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing some selling pressure today. 10-year note futures are coming off of 4 consecutive days of higher price action to trade lower today and actually negating a pretty big chunk of that 4-day rally in today's price action. Looking at the futures market down in the 112 handle today. 112.28 is current level of the futures market as they are giving up some ground here pretty much across the board. When you look at the treasury markets today, selling pressure across the board on all parts of the curve in reaction to the data this morning. We did have some weekly jobless claim data as well as retail sales data. Weekly jobless claims continuing for a second week to show a decline in the claims week over week, and that's viewed as a positive for the other parts of the market, particularly the equity market, as it does appear that the labor market has stabilized, but also retail sales coming in above expectations, and that's another factor, I think, contributing to the selling pressure, as it does appear, at least for the most recent data points, that the economy is maintaining some upward trajectory. There were concerns that the economy was slowing a little too quickly, but based on the data the last week or so, we're seeing, again, inflation moderating, jobs market balancing out, and again, consumer remaining pretty active when you look at today's retail sales. And that's creating selling pressure in the treasury markets. And looking at the yields today, that 10-year yield is up 11 basis points today to 394 basis points, intraday high of 396 basis points, so 2 points off the intraday high. But yield curve is moving higher pretty much across the board as well, from the 6-month all the way out to the 30-year. Now that we did see the 6-month yield increase by 5 basis points, and then you get into the heart of the increase, which is in the 1s through the 10s, really, is where the bigger yield increase happened today, where we're seeing 10, 11, 12 basis points in some respects in the middle of the curve. And then the 20s and 30s, we're seeing them up about 8 to 9 basis points. So yield curve shifting higher pretty much across the board. A little more inverted today as well, as we're seeing that 210 inversion go out to 17 basis points. But again, reaction to some positive economic data, selling pressure in the treasury markets, moving yields higher, and moving that 10-year note future down towards the lower end of the 5-session range.